volatile on the back of the situation with the latest tweets from Mr. Trump. Let me show you those tweets. I'm sure you're familiar with them, but he said that they're going to put additional tariffs on about 30 billion goods. So that's quite a substantial amount of money. Here's his tweet from yesterday. So this is during the talks. The U.S. will start on September 1st, putting a small additional tariffs of 10% on the remaining $30 billion of goods and products coming from China into our country. This does not include the $250 billion already tariffed at 25%. So now all of the imports from China will be tariffed. And this starts in pretty much 1 month's time. So I think it's pressure to put on China to get a deal and get it done quickly to avoid these tariffs. And it comes also at a bit of a surprise moment, I think, because with the U.S. economy rather weak, obviously the Federal Reserve cut rates to support the economy. I still think that it's a situation here where I anticipate at least Donald Trump to not make any moves like this. Why? Because in pretty much 1 year's time, well, in 2020 November, about that time we should have the new presidential election in the U.S. And because the economy is already rather weak, if you put additional tariffs, 10% just before Christmas, and not only just before Christmas when the economy is in a bad state, then that could potentially topple the economy into a recession. Now, obviously, it depends how everything is sold and framed. So it could easily be that you can have some sort of see it like in a positive light, and that could actually help him. But I think in general, the economy is really, really important. So if he were to blame for having a recession, then that could easily cause him to lose his election. So I was thinking he's probably going to wait, and then when he is confirmed to be the next president, because 75% of the time the current president becomes the next president, then he would be really pushing the Chinese administration, just because at that point he has 4 more years, right? But he didn't. So what happened is that the dollar weakened, and in the case of the dollar index, let's begin with that one. So the dollar index, this is your daily chart, is back into below these highs here, and it doesn't look necessarily that it's a very good, sustainable breakout. Not that I wanted to trade this myself, but it looks like obviously if we trade below 97, 94, this will be looking more and more like a failed breakout if we trade below this level here. And that would probably cause the market to go lower, and maybe, I don't know, maybe we're going to revisit the lows we've seen here in the past. I'm not sure. Don't really care too much either. There are some trades, if you were quick yesterday, S&P 500, it did trade below support. It might swing back up again. That could be something. And then there's some other markets as well, which are very sensitive to these sort of news, where we could potentially see some interesting moves. But in the euro here now, so the euro technically remains bearish, and there's no real change to my outlook here, but it's definitely a bit tricky. How will the euro dollar react? Is it going to act like a safe haven? Will people just sell dollars now? Maybe yes, maybe no. I'm not really sure, really. And that's why here it's not so clear. But in, shorting the French stock market is rather clear, because it was already fragile to begin with. Maybe shorting the S&P 500, yes. Maybe looking to get involved in some yen pairs, yes. Trading euro dollar is, again, not really 100% clear. But I can tell you that technically it is definitely clear. So technically nothing has really changed. You still have the break to this May low, and now we're having that hard retest, or that retest of that May low breakout down. And as long as we're below 1161, we're dealing with a downtrend. So there's no real change here, and I think here that as long as we trade below this high, people are probably going to sell. We're at the third fib of this level. It may easily revisit these levels, but if someone told me, Alex, you need to have a position here, then I would rather be bearish from these levels rather than bullish. This is your GBP versus the USD, and I think it's in the process of trying to bottom out. I did an update on this yesterday on the homepage. I'll send you the link in a few minutes. So this is when people stop selling, or when that aggressive down move, right? So we talked about selling up here, and we said probably down here. Well, I didn't say probably down here, but we sold here, and then here the market stabilized, and then it went up, and then it went down, and yesterday I had the Bank of England rate meeting, and I did a nice little update, at least I think is good, and I'll send it to you in a few minutes. What I'm trying to say with that is that probably the Bank of England will keep their powder dry. Annualized GDP growth is at 1.8%, so that's not particularly high. You have inflation, which is at 2%, and you have core inflation, which is at 1.8%. So inflation is pretty much a target, and yes, with the pound declining, we're probably going to have more inflation. But what are they going to do? They can't just raise interest rates because the economy is not very strong. You have the labor market, the housing market, rather fragile. I know the labor market is good, but that's sort of the only thing that is strong really right now. And it's also a lagging indicator. People wait a lot to hire, and they wait a lot until they fire. You can easily have corporations where someone is not being productive for a few months or a year or so, and they'll keep you just because they're waiting for the things to sort of bounce back. And then after a few months, they're like, okay, you know what, we haven't made any money. We need to sort of cut down on the working force. That's sort of how it works. So it's more of a lagging indicator rather than a leading indicator. So they're not in a position to raise interest rates. And I think as well, they want to keep the powder dry. They don't want to do nothing right now, because if they cut interest rates to support the economy, then inflation is going to go way high. And afterwards, when we really have Brexit and they really need to cut, they're not going to be really able to do too much. So they're not going to do nothing. The technical trend here remains bearish because, as far as I know, we haven't seen any progress in the negotiations between UK and Europe. So I think I'm going to remain bearish, and obviously if we go up to 123, I think people are going to short sell around 123 up to 124, with stops probably just about 124.50 or so. I think that would be fair enough for me here at 24.66. Dollar versus the Japanese yen. So obviously and unfortunately, I don't have like access to Donald Trump, but it was looking rather good. They were less dovish, but now when that tweet came out, the market just plummeted, and the stock markets in general overall have been really, really volatile. So this market just traded below support. It's absolutely nothing we can do here. That's why we have stop loss orders. So we would have been kicked out here. And I think right now, if we look at this market, it's just below the low and just above the low. So this market could easily bounce a bit. I mean, fib wise, if we bounce up to 107.50, 107.76, that would not surprise me. And then we just need to look. This is not necessarily the best pair or market, but I think the way we're heading, I think we will revisit these lows again at 104.86. So I think we take out this low eventually, and then we'll probably head lower. Not sure exactly what the best game plan is here, because stop losses right now would need to go up here, so your risk reward ratio would just be bad. So maybe if you're really bearish, you have a very strong view, one maybe can short sell a little bit on the way up, and then short sell on the rest to the downside. If it goes down, it'll go down, trickle lower, and then maybe we'll have that pullback. So maybe that's something better as well. Crude oil prices, even crude oil prices had a negative reaction to the news. And I think now what's interesting is this: we broke to the upside, right? Didn't really gain any traction, break into the downside and not really gaining any traction either. I think here it's just because we're trading sideways, and that's why I don't get involved. There's some people asking me what crude oil's price is going to go, but when the market trades sideways like this, I can give you my view. I can always give you a view. You can always go into shorter time frames, give you a view. But are you going to make money on that view? Probably not, because the market doesn't trust any of these levels when the market's trading sideways. You need to have uh, some sort of um, break, or like in this situation when things are narrowing down, it's just the big levels that matter, like the July 11th high and the June low. Gold prices. Now, gold prices, I think the best way of looking at these ones is to look at this like ascending triangle. So you will link these up like this, like that, and then this would be your resistance level. So obviously you need to have a little bit of imagination here, um, because many of the examples, so textbook examples, they don't look perfectly on in real life, unfortunately. So if you look at this, and then you have that break here, right? So if you look at this like this, you can, if you treat this like a descending triangle, then probably, I mean, we did close on the daily. We closed above this level here yesterday, right? So this would encourage a move to the upside to 1486. Now, because on these breakouts you need to have a stop loss pretty much at the base, and there's no other stops here, there's no other lows here. Unfortunately, stop loss orders would need to go down here. That will be your trend defining level. Now the challenge here is that your risk reward ratio is just going to be bad. So I think there are a few possibilities one can do, and one would be to maybe look at some sort of a dip, 50%, if not a level between the 61.8 to 50% correction level. That would give you a level of about 1421. So I wouldn't mind something like that, and then do like that. It doesn't mean it has to go down there, but that's sort of a good little entry level. The alternative would be we take out this level here, and then we go up a bit, but then you need to get your sort of scalping hat on, and then this would act like your stop, and you could potentially scalp your way up here. But the way it works, it goes like this, probably up, and then sort of struggles, and then down, and then up. S&P. So S&P here, I think, very wild last few days, right? So we went all the way down on the Fed rate meeting, and then we went all the way up. That was a bit of a surprise to me. And then big decline. It's a very volatile situation yesterday, and the way this is looking right now, I suspect we have created a major high at these levels, and I think we will continue to probably trade lower. So the last major low is 27.29, which is down here, which is the June 3rd low, and fib from the very low to the very high gives you these three different levels. So I'm not sure how it's going to influence the tariffs 100%, but it doesn't look very, very good. And it's all about the risk reward ratio. So would I be happy to buy at 38.20? No. At 50? No. Maybe at 61.8, and probably at 2,800. I think that would be a better entry spot. So I'm guessing if we look at it from that perspective, given the uncertainties in the market, then the break here again opened up for that decline, and maybe people will book profits down here where people are going to buy. So from that perspective, you have an okay risk reward ratio. If you shorted on the breakout, then you're looking at, and stop will go just above the high, then you're looking at a 5.69 risk reward ratio. So that could be something. And I think in the case of the German DAX, look at that. So we turned bearish here, or we got stopped out really, and we're forced to turn bearish. Market went down, up, and then the idea was just for this to trade lower and trade back down to the low. Now, if the EC, if the situation of the S&P trades much lower, then I know it's not 100% science this, but if it goes down with 5%, and the German DAX goes down with another 5%, then we'll be trading down here. So I think it's fair, I personally think it's fair now to assume that we're probably gonna trade slightly lower to maybe 11,304. But this is not the spot to sell the DAX. Remember I said up here the market can swing down, and the idea was to buy here. But the problem is the US stock markets, they're gonna probably fall more. So until the US stock markets reach levels where people are gonna be buying, then I don't think that it makes sense here to be buying here. I think in fact it's gonna probably slid lower, spike below the May 31st low. Is this a good spot to short sell? Unfortunately, no, it's not. If you really want to short sell, then maybe you can work with a bearish, have this like 12,289 as a bearish move. If it swings up to maybe 12,100, maybe turning bearish from that level. And that's pretty much it. Let's see if you guys have any questions. And good morning to you guys, by the way. Sorry about that. So we have Dwight Kelly. Good morning. So Dwight Kelly, I know Dwight Kelly since 2015, I think, when I was working for Daily FX. I hope you're doing good, and good to see you back here. So I got a question about the Aussie dollar. Sure, let's take a look about the Aussie dollar. And then Dwight is also asking about your yen. So Aussie dollar. So Aussie dollars, I found that interesting. So this is the Aussie dollars. Let's just hide everything. So the Australian economy, their biggest trading partner is China. And they also, well, it's the biggest trading partner, right? So when China suffers, Australia suffers. It's not a one-to-one, of course, but you have that relationship. So if you look here, what's interesting is this, that we have, this is a weekly chart. So we have now what looks to be a confirmed break to the January 2016 low, if we close below here. So when you take out one low, we need to go to your left and see where's the next low. All right, it's down here, and that will be your next target. So that will be 62.48. So not that weird of an idea. It makes perfect sense. Percentage wise is a slid of maybe 7.6%. So it's not a bad idea. The biggest issue though with this market is that the market itself doesn't offer you a very good risk reward ratio. And what I just showed you is not necessarily a pattern. It's just break one low, you go to the next low. But I'm guessing that as long as you trade below 69, which is level here, any sort of corrections up to 68.26, 68.50 are probably going to be met by buyers. And you know, if you really long term, then you know you still have a 5.59 risk reward ratio. Now I'm already short the Australian dollar, not here, but in another pair, which I shared with my clients. And there, we've been short for about 3 days now, I think. So we managed to get it right in a different pair, which has a different breakout altogether. And now we're just waiting, and hopefully we see the profit we have. I think we're up, well, I am up over 3% on my account. I want to see if that can grow a little bit bigger, maybe 5-6% before taking some off the table. We got a question as well about Euro Japanese yen. So Euro Japanese yen, look at that beauty. So this is a bit upset about this right now when I look at it. You know why? Because I shorted here. So most of the stuff, because I'm a trend follower and I have very tight stop loss orders, I would get stopped out more than 0.5% of the time. More than 50% of the time, sorry. But when it works really good. Now, I didn't trade this one. In fact, I shorted at I don't remember now even. I shorted here because this was a triangle, descendant triangle type of market, rectangle, and so I shorted here, and I went in a bit of profit. And then, as you might remember, we had the ECB rate meeting, and I had my stop loss just above here because the idea was if we swing back into the pattern, I'm gonna get out. So obviously we had a bit of profit, and then the ECB sort of got all sort of Mario Draghi backtracked on what he was saying. The market went all the way up, and then it recompleted. So on the 31st of July, it actually recompleted that pattern here, and then it slid. And you can see we're pretty much at that take profit level. In fact, most Aussie dollar, most yen pairs are rather oversold, and I would be a bit careful with actually short selling this market right now. We need a bit of a pullback. So if we put fibs on this, and unfortunately we just need to put the fib the whole way up here because this is a 6-hour chart and there's really nothing. There's no major highs here. The last major high is up here. So if we take fib on this like that, so you got 119.50, 120, then you have the low. So I wouldn't put any entry orders or limits orders to short sell here immediately, but I will start to get bearish from these levels. And then I would say if we have to trade all the way up to 120.73, then that's probably an indication that the market here is probably not genuinely bearish. Maybe what would happen is that the market would go up because some comments, and that would cause things to go much higher. So you need to be careful. But around that level, I think people will probably short sell. We need to flip to the weekly. So this is your weekly chart, and here your next major level is this level down here, 114.93, and that will be sort of your next target here. And if we just look at the weekly again, you know, trade below this week's high, so around these levels, maybe 121.41. You know, maybe have next week we correct half of this week's decline. So as I said, maybe up to 120, and then probably a little bit lower, revisit the lows, and then maybe all the way down to 114, 115. That's what I would say. Okay, let's see if you guys have any more questions. And as well, I'm gonna send to you that article. So this is the article. But what you can do, if you, it says there's a link. I'll send you the link like that. It goes to my profile and you can see what I'm publishing. So if you bookmark that, it will give you all of my content. As well, I have a list if you want to be added. So what I do is I send this video. So if you actually miss out, I'll usually send that video to you. And sometimes if something happens, like yesterday, I send that update that the comment from Donald Trump when the markets just sort of were collapsing. Get a question: could GBPUSD reach 0.80 with all this carry on with Brexit? I think we could probably. Oh yes, very good point. No, from perils. I totally forgot about that. Good point. Very good point. So with the non-from payrolls, I think the anticipated number, Ronnie, I'll come back to you in a minute. So with the non-from payrolls, the number is pretty much be around 178,000 or so, and I think if it prints around these levels, it's probably going to cause the U.S. Central Bank to sort of probably continue to cut rates, especially now because we have the new tariffs kicking in. It's only if the numbers are really, really strong. I think maybe 200 and something, 220, then maybe the Fed will hold off. And on the other hand, if the numbers are really weak, 100,000, 150, oh sorry, 100,000 or maybe 50, that's when we'll have people starting to sell much, much more dollars. If we look at the expectations today for the for rate cuts before the end of the year. So everybody, the likelihood that the interest rates are going to be at current levels is just 1.7% right now. And you can see that they're definitely going to cut at least once more. 50% of all expectations is that they're going to cut 2 times. And then you have another 25% that think they're going to cut three more times. So I guess if the numbers are really, really weak, you know, that might cause the expectations to go for 3 rate cuts at lit, but I don't really think it will do, but it could do. They already bounced quite a lot, as you can see. From last week, it was just 15%, but I think now, because of the news, I mean, yesterday it was at 22, but I think this was yesterday at close. So I think now, because of those rate cuts, tariffs, you already had a very quick adjustment here. So at least in the rate markets, I think it's rather priced in, and you really have to have some really bad data, I think, to push this up. So to summarize here, if the numbers come out at 50 or 100,000, you should probably expect a bit more dollar selling. Probably dollar euro USD is gonna move up a bit more. And again, it's a bit difficult now because of the tariff situation. And the dollar yen is probably going to trade a little bit lower as well here at that situation. On the other hand, if numbers are good, maybe the dollar might have a bit of relief. I think in general, like if you look at euro yen, I wouldn't short it. Or not short dollar yen here. I think we need maybe a bit of rally. If it doesn't happen today, maybe it'll happen next week. We'll be out for 2-3 days, and then it goes back down again. So we got a question about the GBP USD, if we can reach the 80 level. So I think we can definitely go lower on the GBP USD. If you look here, you got a break to the January lows. So it's the same as with the Aussie, right? When you take out one low, the market goes to the next low. So I think maybe 105. I mean, that would not be unsurprising. But the 80 level, that's when we start to use head and shoulders. I did post about this yesterday. So this is, I don't know if you can see this. Let me check. Yeah. So this is a chart I put on Twitter. So the break to 119.30 can take you down to the 1985 low at 105. And then you have this massive head, left, right shoulder that gives you a target of 74.85. I think maybe 105 would not be unreasonable. The Bank of England themselves, sorry, a government report, really, the government report suggested that on Brexit we could see a 25% slide. I think we can easily have a bit more weakness. Because the economy itself is changing, right? And right now, we'll see what happens. I don't want to say too much, but the economy is changing in general. Like, it's not just here in the UK, it's across the world, right? You have low unemployment rate in the UK, but it's not the same jobs we had in 2014 and 2018 and 2008 and these years. It's not the same jobs, right? It's the gig economy. You're doing your Deliveroo or your Uber, so the amount of money you make per hour is very different than in the heydays when you had all these bankers making a lot of money. In fact, the bankers are moving out now. Some of them, they need to open up shop in other countries to get access to the European market. So it's a very, very different ballgame. Of course, you know, as Boris Johnson said in his statement, you know, they have, I think, biogenetics and things like that. They want to liberate that, and sort of get rid of some red tape. And I think they have to do that, so some of these industries can flourish. And then maybe we'll see, you know, if the UK can bounce back from a situation where they can produce these jobs. But again, it's a challenge across the world, because even, you know, it's not that people don't have, like what do most people do in the world, or most entrepreneurs, right? So the brains are in countries like UK, US, and France, and places like that. But in the UK economy, which is so service oriented, so what do? You hire obviously people in the UK, but you also sort of hire people overseas. And when it comes to the manufacturing, it's definitely like that. Like, why produce a car in the UK or something in the UK when you can produce that overseas? Not everything, of course. There's like the military industry and things like that and stuff like that that needs to be produced here. But there's other stuff, like in the case of, say, US, like most toys and washing machines, TV, Apple phones, all of that is produced in places like China. And this is not a pattern that is just evident now. Like before China, people investing in places like Japan, right, and Singapore. Sorry, not Singapore, South Korea. And then when all these countries become more expensive, they shift to China, and now from China they're shifting to other countries in the region. And at one point, what's gonna be? It's got like Southeast Asia and Asia in general. It's gonna be too expensive. So where's people gonna go then? They're probably gonna go to South America, but most likely Africa, and places where they speak English, because it's a language that people can use. And obviously, infrastructure in Africa right now, it's not 100%. But then you have the Chinese thinking 50, probably 100 years ahead, right? So they're building railroads and infrastructure and managing ports in places like Africa, because they know that eventually all this production that they're doing today is going to be shifted out. Like if you go to places like Shenzhen and places like that, I've been there, I think 2-3 times doing different forex seminars and stuff like that. It doesn't look too much different than any other. Obviously, it's a modern city, so it looks different, but the wealth there is really high. So obviously, they're not going to be doing toys forever, and then washing machines and stuff like that. And there are rural places in China, of course, so maybe we'll see more diversification there. But this whole cycle is part of the capitalist system, and it's just the way it works, the economy. So sometimes people complain and say, "Oh, things are not really good. It's not as good as for our parents." But this has all been predicted by simple economic models that I learned when I was at university. And in the long run, the only thing that produces growth is innovation, right? So when you come up and do something more effectively, so you can save someone money or time or other valuable things, that's when you start to, that's when you innovate. The problem is now, though, is that if you have a great idea like a service, because of the internet, you can have someone overseas doing it for you. Or if you need to do a product, you don't go to the local guy, because you can go to overseas. So it's always going to be a challenge, and in the long run, the growth of the economy all depends on again, innovation. You can sometimes push things up. So for example, if you have big tax cuts like they had in the US, you can bump things up. You can remove red tape, and that could bump up an industry to reach higher levels and liberate them from so to some extent. But then again, it all depends on this and the willingness as well of people living here and to do products locally instead of doing it overseas. So that's why education, universities and stuff like that is really, really important. And unfortunately, in the UK, it's actually very expensive to study now. Whereas in places, for example, where I was born, Sweden is still free. Places like France as well, still free. And I think in Scotland as well is free. So we'll see how they manage with that. There's so much stuff going on in the world. Guys, I think we're going to wrap things up. I want to thank you so much for joining me. Okay, so I got one question here. Last one about euro pound. So let's do that one. And guys, don't forget to like the video, right? If I click here, I want to, how many of you guys are joining me? Okay, one person. One question wow, here. I'm doing a really bad job today. Last one about euro pound. So let's do that one. Click here. And guys, don't forget to like the video, right? Just click on it and like. I want to ask for your GB. One person. One question wow, here. I'm doing a really bad job today. Last one about euro pound. So let's do that one. Click here. And guys, don't forget to like the video, right? Just click on it and like. So this is your
ask for your
one question here.
Wow,
I'm
for
doing
me,
a really bad
it
job.
looks
I lost one
I
of
should
my
talk less about
so
rectangles.
click
Hey
here
guys,
on
don't
the
like
like
the video, right?
key.
Click
I know
on
it's
that.
not perfect 100%
this is your
rectangle.
ask for your
but
one
again,
question
question
here.
here. I'm
For
doing a
me,
really
it
bad job.
looks
I lost one
I
of
should
my
talk less about
rectangles.
rectangles.
Click
Hey
here
guys,
on
don't
the
like
like
the video, right?
key.
Click
I
on
know it's
that.
not perfect.
So this is your
ask for your
Wow,
I'm doing a really bad job. I lost one of my rectangles. Click here on the like video, right? I know it's not perfect. So this is your ask for your Wow, I'm doing a really bad job. I lost one of my rectangles. Click here on the like video, right? I know it's not perfect. So this is your ask for your Wow, I'm doing a really bad job. I lost one of my rectangles. Click here on the like video, right? I know it's not perfect. So this is your ask for your Wow, I'm doing a really bad job. I lost one of my rectangles. Click here on the like video, right? I know it's not perfect. So this is your ask for your Wow, I'm doing a really bad job. I lost one of my rectangles. Click here on the like video, right? I know it's not perfect. So this is your ask for your Wow, I'm doing a really bad job. I lost one of my rectangles. Click here on the like video, right? I know it's not perfect. So this is your ask for your Wow, I'm doing a really bad job. I lost one of my rectangles. Click here on the like video, right? I know it's not perfect. So this is your ask for your Wow, I'm doing a really bad job. I lost one of my rectangles. Click here on the like video, right? I know it's not perfect. So this is your ask for your Wow, I'm doing a really bad job. I lost one of my rectangles. Click here on the like video, right? I know it's not perfect. So this is your ask for Wow, I'm doing a really bad job. I lost one of